Hello everyone, this is the part 1 of your RBI Circulars June 2025 series. So before starting the discussion, I would like to share an amazing news with you that we are giving a preparation kit for your RBI Grade B 2025, that too free of cost. This will be including 10 PDF ebooks, your RBI Grade B complete guide for 2025, 100 plus economic and finance terms, RBI Grade B previous year questions for the last 5 years. Budget 2025-26 highlights and with MCQs. RBI Grade B 2024 AIR 1's note will also be included in this particular package. 60 plus model ESI and FM descriptive question is there. Quant reasoning formula ebooks are also there and whatnot, right? 20 model essays for RBI Grade B and 500 general awareness MCQs plus 120 management MCQs will also be included in this course. So definitely you can download everything, all the PDFs. Here we are giving you a preparation kit, that too free of cost. You can access this particular preparation course. Link is there in the description, right? Download our Oliveboard application and there you will be getting the updates related to all the sessions and the PDFs related to all the sessions. We have also launched the RBI Grade B 2025 course. This is a complete course, right? You will be getting physical books as well in this particular course. You can check the highlights of this course as well, right? Let's start with the first RBI circular, RBI lending against gold and silver collateral direction 2025, right? So this is the lending against loan and gold and silver collateral. If you are taking the loan and you are giving gold or silver as collateral, definitely these direction will apply. So RBI has restricted here lending against primary gold, which is nothing but bullion, right? Due to the speculative and non-productive usage, RBI has restricted here the primary gold, which we also call it as bullion, basically pure gold. Lending is allowed only against gold jewelry, ornaments and coins, right? So if you have jewelry, if you have ornaments, if you have coins, then you can definitely take the lending, that too for the short-term purpose, right? The objective is leverage the idle gold, silver while safeguarding the lender's interest here, right? So these directions are here to harmonize the rules of across all the regulated entities. We are already having a lot of rules and regulation regarding this, right? We are just harmonizing here, plug conduct related gap and strengthen the transparency and borrower protection. Still there is a need for enhanced transparency in this segment. Plus RBI need to protect the borrower as well. There are some cases where high level of protection can be done. So definitely we do have this circular, right? So everything is mentioned here, purpose of the circular and everything. Do remember that you can lend only against the collateral of gold, jewelry, ornament and coins. You cannot lend against the pure gold, jewelry, ornaments and coins, right? So do remember this thing, pure gold lending here is not allowed. These powers are exercised under these sections, right? So implementation timeline where will be 1st of April 2026. This you need to remember. You need to implement this from 1st of April 2026, right? That's the stated timeline in this particular circular, right? We have discussed about the objectives. I have pasted the screenshots from the circular as well so that you can get a feel of the circular. However, I don't prefer to read circulars as a student, okay? I personally advise you to please watch these videos, download the PDF session related to this particular class, right? That will be definitely helpful because I have already simplified each and everything related to this circular for you guys, right? If I talk about the scope, so broadly this is applicable on commercial banks, right? Primary cooperative society, rural cooperative bank, all the non-banking financial companies, including the housing finance companies. So broadly all the regulated entities here are covered. If I talk about definition, then eligible collateral will be obviously gold, silver, jewelry, ornaments and coins. Do remember, no pure gold or silver is allowed as of now, right? Here only jewelry, ornaments and coins are allowed. Primary gold and silver, bullion or any kind of non-jewelry coin are not at all eligible. So bullions are not eligible here, right? Pure gold को हम क्या बोलते हैं? Bullion बोलते हैं. We call it bullion. Bullet repayment loan, both principal and interest due at the maturity. Let's suppose if I am paying both principal as well as interest at the time of maturity, then that's a bullet repayment, right? It's a term. Next is LTV ratio. LTV ratio means nothing but loan to value of the collateral, right? Loan to value of the collateral, how much amount of loan I am taking and what is the value of the collateral security. Let's suppose the value of the collateral security is 100 rupee and I am taking loan of 60. Now that's fine, right? So LTV ratio will be called as 60% here, right? What is top up loan? Additional loan on the same collateral. Let's suppose I do have a same collateral. I have taken a primary loan. Now I am taking a top up loan out of it, right? Same security पे एक और loan लेना, that's nothing but top up loan, right? Okay, let's continue. General conditions: lender must frame a credit policy. If you are lending someone on the basis of gold or silver, coins, jewelry and so, then you need to have a credit policy. You need to specify the limits, LTV, you should be having standard operating procedures, you should be having purity norms and valuation criteria well established. Then only you can lend, right? You need to have a credit policy here. Loans greater than 2.5 lakh now require a credit assessment and a verification of repayment capacity. It needs a credit repayment assessment. If you are giving a loan of greater than 2.5 lakh, uska credit assessment kar lo and value, verify that whether he or she will be able to repay that particular loan or not, right? That's a minimum general criteria as of now, right? So 2.5 lakh is the new limit as of now. A single borrower limit we have already discussed. There is a maximum LTV ratio criteria as well. Okay, we'll be discussing about that as well. Okay, do remember the detailed credit assessment will be done if the eligible collateral is above 2.5 lakh, right, to the borrower. General conditions: renew and top ups are only allowed. You can only renew your loan or you can only take the top up if you are already well within the LTV limits, right? If you are already within the LTV limit, let's suppose you have a collateral value of 100, you have already taken a loan of 60, so that's 60% LTV. Let's suppose if LTV is permitted till 75%, then in that case 15 ka loan you can all take as a top up. You can take a loan of 15 as a top up and then your LTV will be still within the prescribed range. We will be discussing about the LTV as well. What is LTV? What is the prescribed range of LTV in this particular case, right? Loan must be classified as standard. Obviously, if you are renewing your loan or if you are taking a top up, then loan need to be classified as a standard asset. Okay, you cannot renew your loan or take a top up of loan on the basis of a earlier loan which in itself is a NPA, right? That's not possible. For bullet loans, accrued income interest must be repaid before the renewal. So if you are doing any kind of renewal, first pay the accrued interest which is there in case of the bullet loans, right? Then prohibited lending against primary gold and silver. Whenever we talk about primary, obviously it's talking about pure gold, which is also called as bullion, right? So you cannot take loan against, you cannot lend loan against primary gold, silver, gold ETF, mutual fund units backed by the gold or silver, right? So you cannot take loan on the primary gold, you cannot take loan on the gold ETF and mutual funds that are ultimately investing in gold or silver, right? So that's not permitted. Repledging or cross pledging third party gold or silver. Let's suppose you have already have a gold or silver. Let's suppose you are बैंक के कस्टमर ने आपको गोल्ड दे रखा है, you are now repledging it or cross pledging it with another bank. That's not possible, right? This is a third party gold. This is the gold of the customer. How can you pledge it, right? How can bank A pledge it, repledge it? That's not possible, right? That's not possible. So these kind of situations are completely prohibited here. A lender shall not grant any advance or loan against the primary gold or silver or financial asset backed by the primary gold or silver. It's clearly written in the circular, so you need to remember this thing, right? Next is not to extend a loan where ownership of the collateral is doubtful. Let's suppose I do have a gold, but I'm not able to prove that this is my gold. In that case, I won't be getting any kind of loan because I am not able to prove the ownership of the asset, right? So I need to have suitable documents or declaration, right? Otherwise, I won't be getting any kind of loan here, right? So that's what is written in these screenshots as well. I have taken these screenshots from the circular itself. You can read them later on. Then restriction on ceiling. Bullet repayment loan for consumption capped at 12 months. For bullet repayment loans, For consumption, they are capped at 12 months. It cannot exceed 12 months. Maximum permissible collateral per borrower, and this is the maximum collateral per borrower. If you are taking a gold loan, definitely you cannot pledge it more than 1 kg. If it's a silver ornament, then 10 kg is the limit. Gold coin 50 gram, silver coin 500 gram. That's the maximum limit here per borrower. Okay, per borrower. So regulated entities now need to check these kind of conditions as well. If I talk about the valuation, then based off lower of the following 30-day average price. What is the average price of 30 days? Take that. This is the first criteria. Second is previous day price. What is the price prevailing on the very previous day? Whichever is lower. Lower of the following two will be taken as the valuation of your gold. So if you are going to the bank for availing loan against your gold and silver, the valuation of that gold and silver will depend on the 30-day average price of that gold and silver or previous day price, whichever is lower. And obviously many entities are there who are publishing the gold price and silver, so you need to source it from the IRDAI or SEBI regulated entity, right? And obviously valuation will exclude precious stone, fastening, gems, etc. Let's suppose in your gold ring there is a precious stone also attached, so obviously we will be excluding the precious stone weight and will be only giving you the loan on the gold, effective gold, right? So what is IBJA, Indian Bullion and Jeweler Association Limited? So you can take the price, you can refer the price for the computation of that 30-day average or previous day closing, right? This is the most important thing, LTV ratio, loan to value ratio caps. So here is the ratio cap. If the loan size is up to 2.5 lakh rupee, then your LTV ratio can be 85%. It's more than 2.5, however it's up to 5 lakh, then 80% will be your LTV ratio, and beyond 5 lakh 75% will be your LTV ratio. You need to remember these things, right? Please do remember these limits. Okay, now the criteria of checking the quality of gold plus valuation, it must be standardized across all the branches, right? We are having, as regulated entities, we are having so many branches, so all the processes needs to be standardized across all the branches, right? Valuation and assaying guidelines cannot be different from multiple branches. Borrower must be present during the checking, right? Assaying means checking the quality of the loan, so gold or silver, so definitely borrower here must be present. Deductions any kind to be explained and recorded. So let's suppose if there is a precious stone attached to the ring, so we'll be only valuing for the ring and giving the loan on the basis of the value of the ring. So definitely we need to account for the deductions as well. We need to record them as well. So that's what here is mentioned. Standardized documentation should be very standardized in nature. Loan agreement needs to include everything related to the description, value of the collateral, auction rules, triggers, repayment, settlement timelines, right? Everything should be there. There should be a certificate as well which can describe the purity of it. So 2 copies should be there of this particular certificate, one for the borrower, one for the records here, right? One will be giving to the borrower that your gold or silver is having this kind of purity, and one will be keeping for our record purpose. Communication must be in regional language or borrower's choice, right? So that's what written here in this particular screenshot from the circular. Next, if I talk about the collateral management, then handling and storage, only employees in secured branches can definitely handle the pledged asset. Not everyone, only the employees that are there in the secured branches. It cannot be kept in any other branch. The branch should be highly secured in nature. Inter-branch transfer is also allowed only under branch closure, shifting or policy defined exception. Let's suppose if one branch is closing, definitely you need to obviously transfer the gold from that branch to another branch, or in case of shifting or in case of policy defined exception. So these are the only 3 cases where inter-branch transfer of gold and silver, which is being kept as collateral with your bank, is allowed. Surprise verification and internal audit will be also mandatory here, right? Collateral release, when you'll be releasing the collateral, obviously if the borrower has paid, the money, the loan amount, you need to return it within 7 working days of the full repayment year, right? You need to, वैसे तो you need to give it on the very same day. However, the tenure cannot exceed the 7 days. So you need to remember this line. If the borrower has settled the loan obligation, you need to give it immediately on the very same day. If not possible, then within 7 working days, not exceeding that. Not exceeding within 7 working days. That's an important line. Auction procedure, let's suppose he is not able to pay the money. Then we can give it a notice. We can give he or she a notice, right? Or legal here. That's a mandatory thing. We need to give them the notice. Then auction first in the same district. First you need to try to auction that in the same district of your regulated entity. If not, then you can also opt for online or nearby district also you can do the auction, right? If the auction fails in your own district, nobody is ready to buy it, you can auction it online, plus you can auction it in some other district as well. There should be a reserve price of that auction. At least 90%. At least 90% or more than 90% of the current price should be the reserve price that will be there in the auction, not less than that. Okay, that's the bare minimum. After 2 failed auction, let's suppose you are doing it at a higher than 90% valuation, the reserve price is greater than 90%, still you are not able to do it, then after 2 failed auction you can even take 85%, at least 85% or more than 85% as the reserve price, right? Lenders and related party obviously cannot participate in this, and the surplus, if any, if you are getting any kind of surplus over and above your loan, you need to refund it back to the borrower, right? So that's what is written in this particular screenshot from the circular. You need to pay the compensation as well for any kind of loss or damage to the lender. The lender bears repayment or replacement cost for any kind of loss or damage. And if you are doing any kind of delay, let's suppose you cross the timeline of 7 days, you are still not able to repay the you are still not able to give the gold or silver to the borrower despite of the loan repayment, then you need to incur a compensation of 5,000 rupee per day. You need to pay to the borrower 5,000 rupee per day, right? That's a compensation. If there is any kind of unclaimed collateral, then the collateral unclaimed is greater than 2 years after the repayment will be treated as unclaimed. Let's suppose I'm having a security, right, as a collateral. The loan is already repaid by the borrower. However, nobody is coming to claim this particular gold. ऐसा भी होता है, right? ऐसा भी होता है. Nobody is coming for claiming this gold. Then after 2 years from the date of repayment of this loan, this will be treated as unclaimed. So I'll be waiting for 2 years and then this will be treated as unclaimed here, right? So half yearly reporting is required in this case to the board or customer committee. Plus we need to also organize special drives so that we can trace the borrower or legal heir of the borrower and we can return the gold, right, or silver. So these are the broad things, guys. I have already mentioned short key summary pointers as well for you guys. So just before your examination, you can go through these key pointers as well. Plus you can also add on some of the key pointers that you think can be important, right? Broadly, I have incorporated everything here. Next is changes in the liquidity adjustment facility. We all know that RBI slashed the repo rate by 50 basis point, right? Usually they do it by 25 basis point. However, in the monetary policy statement, which was dated in 6th of June 2025, they slashed it by 50 basis points. So the new rate is as of now 5.5. So that's the notification for it, right? If I talk about SDF and MSF, they are already 5.25 and 5.75 respectively. Okay. Next is a standing liquidity facility for primary dealer. Whenever RBI slashes repo rate, the first notification comes related to RBI repo rate cuts, and the second notification, the following notification, comes related to the standing liquidity facility for primary dealer, right? That's also equal to repo rate only. It's tied up to the repo rate only. So 5.50% will be the standing liquidity facility for the primary dealer, right? So your notification हमेशा आता है. Next is a review of qualifying criteria, asset criteria. So there is a small change in the qualifying asset criteria of NBFC microfinance institution. If you are a NBFC MFI, Then there is a small change in the qualifying asset criteria. They have changed the definition of it. Qualifying asset of NBFC MFI shall constitute minimum 60% of the total asset. So minimum 60% of the total asset shall constitute the qualifying asset as of now on an ongoing basis. And if an NBFC MFI fails to maintain the qualifying asset as stated above, that means if it's not 60% for 4 consecutive quarters, then it shall approach the RBI with the improvement plan, right? Remediation plan लेके जाएंगे वो for that matter, and definitely RBI will help them. So do let me know in the comment section what was the earlier limit. Now it is 60%. Okay, do let me know in the comment section the earlier limit if you know. Then there was another notification related to the penal interest on shortfall in the CRR or SLR requirement. We all know that whenever a bank or regulated entity fails to meet the CRR requirement or SLR requirement, they need to pay the penal amount of interest to the RBI. That is nothing but bank rate, right? So there is a change in bank rate as well because the repo rate is being changed. Okay, so you can see that the existing rate was 9.25% and 11.25%. Now the rate is 8.75% and 10.75%, right? That's the basic change. And then another criteria was maintenance of CRR. We all know that RBI has reduced the CRR as well by 100 basis point to inject high level of liquidity in the banking system. Now this will be done in the 4 stages, 4 equal tranches of 25 basis point, right? So this 100 basis point will be done in 4 equal installments or tranches, right? So CRR will be 3.75, 3.5, 3.25 and 3% respectively, beginning from 6th of September, 4th of September, 1st of November and 29th of November respectively. So they have very well stated the dates as well in advance ki is date pe you need to reduce the CRR, right? Then we have here is just a amendment related to the foreign exchange management, foreign currency account by person resident in India, right? Regulations 2025. So what they have amended here is in the principal regulation in schedule 2, application for opening the diamond dollar accounts, the word and the figure of 2 year, the word 3 year shall be substituted. So the correct, the updated answer here will be, the updated choice here will be 3 years as of now. Okay, so that's just an amendment in the regulation, existing regulation. Next is the prudential treatment of PSL shortfall contribution. We all know that UCBs, right, it is specific to the urban cooperative banks. So if UCBs fail to achieve the PSL target, then they obviously contribute to a particular fund, eligible fund with NABARD, NHB, SEBI or Mudra Limited, right? Now there was a limit which was causing a trouble. Let's have a quick background related to this. Urban cooperative banks are required to meet the priority sector lending targets. So if urban cooperative banks fail to meet these targets, then in that case they need to contribute an amount equal to the shortage of the PSL to NABARD, NHB, SEBI, Mudra Limited, right? Now whether you give directly to the priority sector lending or you can contribute to these organizations, ultimately these organizations will also be helping the priority sector lending areas only, right? So what was the existing rule which was causing a trouble for UCBs? There was an exposure limit for UCBs. If you are a single borrower or a party, maximum 15% of tier 1 capital was the limit. If the group of connected borrowers are there or parties are there, then maximum 25% of the tier 1 capital, right? For single borrower it's 15%, for maximum for group borrowers it was 25%. Now this particular limit was creating an issue for the UCB because when they were contributing towards NABARD, NHB, SEBI or Mudra, this limit was getting filled. So now RBI has done what? They have exempted the contribution to the NABARD, NHB, SEBI or Mudra from being counted towards these exposure limits. So if you are as a UCB contributing towards these organizations, these entities, NABARD, NHB, SEBI or Mudra, then this particular contribution won't be calculated for this particular limit purpose. This contribution is excluded from the limit. This limit is completely separate. Apart from this limit, you can, in addition to this limit, you can contribute to the NABARD, NHB, SEBI, Mudra, right? So RBI has exempted this particular contribution made to these organizations from being counted towards these exposure limit. This is the criteria. This is the criteria. These contributions are usually not considered as a lending risk in usual sense. That's why RBI has excluded it. I have done a detailed video as well on the SFBs and the UCBs as well for this particular treatment, right? Now, what about the risk weight? So what risk weight will be given? All other asset criteria will be given by the UCBs towards this contribution. If you are contributing towards NABARD, NHB, SEBI or Mudra, you need to classify this particular contribution as per the prudential norms under the all other asset criteria for risk weight purpose, and the risk weight will be 100%. 100% risk weight will be given in this particular case, right? So that's the provision basically. You need to maintain adequate amount of capital as well in the backing, because your risk weight is increased to 100% as of now. Next is large exposure framework amendment in the exempted exposure. So this is nothing but the same only, related to UCBs only. So they have just amended the list of exempted exposure. So now contribution by the UCB towards the eligible shortfall in the priority sector lending towards NABARD, SEBI, NHB, Mudra will be exempted. So this is nothing but amendment in the list of exempted exposure, right? Next is related to your RBI KYC amendment directions 2025, a very easy direction and an important one. I have again released a separate video as well. I hope you guys have watched that as well, right? So this is related to the RBI Know Your Customer Amendment Directions 2025. If we talk about the background, RBI has issued already the master directions on the KYC in 2016, right? Because of the Prevention of Money Laundering Act, right? We all know that KYC is very, very important in order to prevent the money laundering. And that's why banks and regulated entities are always focused on the maintaining high quality and always high efficiency in the KYC side. Now, these amendments are there to enhance the customer protection, obviously improve the service delivery and continued financial inclusion. KYC also plays a good amount of role if I talk about the financial inclusion as well, right? So this particular notification is effective immediately. First, they have given a relaxation for low risk individual customer. If you are a low risk individual customer, now that is again a classification which is to be done internally only by the bank. So if you are a low risk customer, then there are some kind of relaxation related to KYC. What is the new provision? Banks and regulated entities must allow all transactions for the customer which are classified as low risk. Even if your KYC is pending, you can do all the transactions if you are a low risk customer for the bank. Now KYC must be updated. It's not like that you can do all the transactions hamesha ke liye. That's not the case. You need to someday update the KYC. What is this someday? KYC must be updated within 1 year of falling due. So let's suppose it's falling due as of now today. So within 1 year, I need to get my KYC done, or June 30th, 2026. June 30th, 2026, whichever is later, whichever is falling later, I need to do KYC by that date. So that's a kind of benefit that RBI has given me. That's a relaxed KYC update. If I'm a low risk customer, I can get my KYC updated within 1 year of falling due, or by 30th June 2026, whichever is later year, right? However, regularly my account will be monitored here and I need to do the KYC, right? So that's what is written in this particular circular. Plus use of business correspondents as well for the KYC update. So RBI has also now allowed banks to use the business correspondents. So banks can now use their BCs, business correspondents, for the periodic KYC updates, right? Applicable for no change in KYC information, or only in the case of address change. Let's suppose nothing is getting changed in my KYC. So I just need to give a declaration. I can do it via business correspondent as well. I don't have to go to the bank, right? If there is any kind of address change, then definitely that address change can also be processed via this business correspondent, right? Self-declaration plus supporting documents can be collected electronically by the business correspondent. If not feasible, it can be taken by the physical form as well until the e-mode is ready. Okay. So that's the provision is all about. If I don't have any kind of change in the KYC side, so I can just give a declaration. If there is an address change, then it can also be done via business correspondence, right? So it will definitely give a good amount of KYC relaxation to regulated entities and to the respective customers as well. Okay. Due notice of periodic updation of KYC. Let's suppose if your KYC is due, right, you need to redo your KYC, then the bank, the regulated entities needs to at least give 3 advance notice intimation. Let's suppose my account is with HDFC Bank. HDFC Bank needs to give me 3 advance notice if my KYC is due, right? Including at least 1 intimation by letter. Out of these 3 notices, 1 should be by letter, by post. Rest other 2 can be via email, can be other methods as well, right? Other electronic means as well. So that's the bare minimum requirement for the regulated entity, right? So I have simplified everything for you guys in a pointer notes. And again, bank needs to fully implement this particular thing by 1st of January 2026. This particular date you also need to remember, right? Okay. Then we are having updation or periodic updation of the KYC, right? So the Reserve Bank of India has observed a large pendency in case of KYC updation for the direct benefit transfer, electronic benefit transfer, and these kind of schemes. That's why they have brought this kind of particular circular, right? So they have now allowed the business correspondents as well to facilitate the KYC updation here, right? That was the sole reason. So there is face-to-face mode for onboarding the customer. They have given the guidelines related to that as well. Okay. Then eKYC authentication and biometric based authentication will also be done if the face-to-face mode for onboarding the customer is there. If no face-to-face mode is there, then definitely the mode can be done by using the Aadhaar OTP based eKYC norms, right? So similarly, there is different case, like you can do it via video based customer identification process as well, whether it's face to face, whether you are onboarding the customer non face to face. So definitely processes depend on case to case basis, right? Next is inoperative account or unclaimed deposits in the bank. So the credit balance in any deposit account, if you are having any kind of credit balance in the deposit account maintained with the bank that have not been operated upon for 10 years or more. So you haven't operated that bank account for 10 years or more, or any amount remaining unclaimed for 10 years or more, then definitely the Deposit Education and Awareness Fund Scheme 2014, you need to transfer by the bank to the DEA fund, right? Deposit Education and Awareness Fund में चला जाता है वो, अगर आप 10 साल से ज़्यादा उसको ऑपरेट नहीं कर रहे हो तो. There is a need to enable the business correspondent to facilitate the updation of the KYC as well. If the KYC is very well updated, then these kind of accounts will not turn into dormant, right? So that's why they have facilitated the business correspondents as well. Accordingly, RBI has exercised the power by section which is already there in the section 35A, right? They have amended the inoperative accounts and unclaimed deposits in the bank as well. So bank shall make available the facility of updation of KYC for activation of inoperative account. If your account is inoperative or you do have any kind of unclaimed deposit at all the branches, bank will make the facility of updation of KYC for activation for you guys, right? Further, bank shall endeavor to provide facility of updation of KYC in such accounts and deposit through video customer identification process. So this we also call it as VCIP. The bank will also help you by updating your KYC via video customer identification process as well, right? So that's the basically these kind of additional services of an authorized business correspondent can also be utilized for this purpose, right? So this is all for KYC. Next is stripping or reconstruction in the state government securities, the most important circular. I have done a separate video on this as well, right? The stripping or reconstruction is already allowed in central government securities. Now RBI has allowed it in the state government securities as well. So if I talk about a state government bond, what do you get? If I talk about a bond, what are the obligations that are attached to the bonds? Interest repayments and principal repayment, right? These are the two things that are there in a bond: interest repayment and principal repayment. Now this is a bond. Let's suppose this is a 10-year bond. Now after interest I'll be getting every year. However, principal I'll be getting only after 10 years, right? So this is a restrictive security. Why? Because everything is fixed already. Let's suppose an investor came to me. He asked me to give me the interest rate. He asked me to give interest for the 5th year directly. He just wants to purchase the interest component of this bond, that too which is maturing in the fixed 5th year, or maybe 4th year, or maybe 10th year, because obviously he is having that kind of cash inflow or outflow, requirement of cash inflow or outflow. So उन्होंने मुझे बोला कि सर हमको तो 5th year का ही कैश फ्लो चाहिए, we need the cash flow of 5th year only, or we just need the cash flow of principal. Take 1 crore rupee from us, directly pay us the principal amount after 10 years, right? Obviously it will be a zero coupon bond in that case. Let's suppose he's paying us 7 crore, 8 crore, and after 10 years we'll be paying him 10 crore, right? It will be in the nature of zero coupon only. But he wants to buy only the principal component which is maturing after 10 years. Or he wants to only buy the interest rate, the interest coupon of 5th year or maybe 7th year. That's not permitted in state government bond. That's nothing but stripping. We are just separating the interest component from that of the principal, right? It's just like a cake. This is a bond. Now let's suppose this red one is the principal repayment at the end. Rest are interest repayments. This is year 1, year 2, year 3, year 4, year 5. Here in stripping, what I am doing is I am separating the 5 components of interest. We are having 5 components of interest: year 1, year 2, year 3, year 4, and year 5. And I am separating the 1 component of principal. So now I have 6 financial instruments, 6 securities instead of 1. Earlier I was having just 1 cake, 1 bond. Now I do have 6 financial securities. Why? Because I can sell all the interest rate components individually as well. You take the year 1 interest, you take the year 2 interest, you take the year 3 interest, you take the 5th year end principal. You can sell these 6 securities separately as well, and that's what stripping is all about, right? That's what stripping is all about. Earlier it was already there for state government securities since April 2010. Now it is also permitted for state government securities, right? So I have already explained you the concept of stripping. Stripping is nothing but separating the trading of registered interest and principal. So I'm just breaking this bond and I'm making strips out of it, right? Different interest components and different principal component. In interest component also I have a variety of it: 1 year, 2 year, 3 year. These are separate securities. Think of a bond. I'm just breaking this bond into multiple bonds. If I talk about interest, then this will be year 1 will be 1 year bond, year 2 will be 2 year bond, year 3 will be 3 year bond, year 4 will be 4th year bond, year 5th will be 5th year bond. If I talk about principal, again it will be a 5th year bond, right? Now investor can invest in any of the security. These are 6 securities. Investor can choose according to their needs. Let's suppose an insurance company came to me. He asked me that we do have an obligation which is maturing after 5 years. After 5 years, we need to pay a particular policy holder 1 crore rupee. So now we are investing in your principal part of your bond. We are giving you 80 lakhs as of now. You pay me the money 1 crore after 5 years. So I'll give him my principal component bond. He give me 80 lakh. This is a zero coupon principal bond. I'll be paying you 1 crore after 5 years. That's the provision. Now insurance companies and pension companies are very happy with that decision. Why? Because they are the real consumers for these kind of financial instruments. They are in need of these kind of financial instruments, right? So that's the concept of stripping here. Okay, I hope you are understanding this. I have a detailed video as well related to stripping on the YouTube channel of Oliveboard. You can watch that as well, right? So when a government issues a bond, it promises to pay the interest, which is nothing but coupon annually, let's suppose, and we give it a principal as well at the end of the tenure. So when we strip a bond, we are nothing but we are separating all the interest payments and the principal payment, and these instruments can now be traded separately, right? These instruments can now be traded separately. I have given an example here as well. You can read it later on. It's nothing but the similar example only that I have already stated you guys. Okay, let's suppose a Maharashtra government issues 1000 crore security. The tenure is 10 years. Coupon is 7.85%. Now if I want to break this bond, if I want to strip this bond, then 10 interest components will be there every year, 7.85%, and 1 principal component will be there. So can I say that I can strip 11 securities or 11 financial instrument out of this particular bond, right? I can separately sell all the interest components. I can separately sell the principal component as well. So now we have 11 strips as of now. Now what do you mean by reconstruction? Let's suppose these 11 strips are there. We have separated the bond. Now we are not in need of that particular strips, right? We want to consolidate the bond again into one particular bond of 10 years. So that is nothing but reconstruction process. Here we will be merging all the strips related to interest components and principal. We'll be merging all the strips and we'll be consolidating the bond again into one bond of 10-year maturity. राइट सर क्या कर रहे हो, पहले स्ट्रिप कर रहे हो फिर ये करो, यार अब क्या करो, कोर्स में है तो करना पड़ेगा ना, राइट करना ही पड़ेगा, कोई ऑप्शन नहीं है. और क्या है, बहुत सिंपल सा कॉन्सेप्ट है. फर्स्ट वी आर ब्रेकिंग द बॉन्ड, दैट्स कॉल्ड अ स्ट्रिपिंग. देन वी आर अगेन रीमेकिंग द बॉन्ड बाय जॉइनिंग ऑल द स्ट्रिप्स, दैट इज नथिंग बट रिकंस्ट्रक्शन. डू रिमेंबर प्लीज, डायरेक्टली एग्जाम में आ सकता है कि एक बॉन्ड को अलग अलग पार्ट्स में डिवाइड करने को क्या बोलते हैं, स्ट्रिप करना, स्ट्रिपिंग करना. अलग अलग स्ट्रिप्स को कंबाइन करने को क्या बोलते हैं, कौन सा प्रोसेस बोलते हैं, रिकंस्ट्रक्शन प्रोसेस बोलते हैं, राइट. कैसे होता है, व्हाई आर दीज डन, सबसे पहले तो क्यों होता है, बिकॉज इट्स गिविंग अस द फ्लेक्सिबिलिटी टू द इन्वेस्टर, राइट. somebody wants to invest just for 10 years for the principal component, somebody wants regular cash flow at first year, 5th year and 10th year, so they can buy my first year, 5th year, 10th year wala interest component. It works like that. Everybody has a different demand, right, everybody has a different need. So that's why the investors can choose the components as per their needs. Okay, that's stripping, that's the benefit of it. And these are zero coupon instruments, obviously. These are zero coupon instruments, obviously, because let's suppose after 10 years I'll be paying him 100. So whether he'll be paying me 100 only as of now, no, he'll be paying me only 80 rupee or maybe 70 rupee or maybe 60 rupee. Otherwise what will be the benefit, right? Let's suppose you are coming, you are asking me for a principal bond of 10 years, right? So I promise you to pay 100 rupee after 10 years. So what is your benefit? You are giving 60 or 70 rupee to me as of now. I'll be paying you 100 rupee in the near future. So that's nothing but interest only. So it's a zero coupon security. What do you mean by zero coupon? I'm not paying you any interest, but effectively I am paying you interest, right? Every year I won't be paying you interest. However, zero coupon bonds are issued at deep discount, right? Earlier only state government securities were eligible. Now they have made earlier their central government securities were eligible. Now they have permitted the stripping for state government securities as well. Okay, so that's the particular circular. Okay, so the eligible security must be fixed coupon security. It should not be any kind of variable coupon security, otherwise it will be very difficult to break that. We all know that. In advance we need to know whether what is the percentage basically. So it should be a fixed coupon security only. must be issued by the state government or union territory. Residual maturity must be up to 14 years. It should be up to 14 years at least, right? Minimum outstanding amount should be 1000 crore. The bond outstanding amount should be at least 1000 crore. Then only you will be able to break it, to strip it, right? Then the eligible security that you are stripping, there should be SLR compliant. Let's suppose bank is investing in your securities, then it should give a SLR eligibility for that bank. That means ये SLR securities के अंदर classified होनी चाहिए, and it should be transferable in the current market, right? Everything will be done via e-commerce system here. Two types of market participants will be there: SGL account holders and gilt account holders. SGL account holders, they do have a direct SGL account with the RBI, so they can use the e-commerce platform. For gilt account holder, they need to request their custodian, who in turn is having a CSGL account with the RBI, right? Who in turn is having the CSGL account with the RBI. So that will be the case. Okay, there is a nomenclature here as well, but you don't need to remember so many things as of now. Okay, you just need to remember this particular concept. Okay, I have given you all the conditions. These conditions are very, very important. Please do remember these conditions, right? Okay, these are the important pointers. Like, it will definitely enhance liquidity. Why? Because earlier the bond was not so liquid. I am now breaking it apart in multiple parts, so it becomes liquid. Investors को काफी सारी choice मिल जाएगी, and this is a kind of risk management tool as well. At the last, I have given you an example. Please read this example very well, and I have given you guys summary pointers as well. So please do read these summary pointers as well. Okay, right? So that's all from my end for today, guys. Thank you so much. See you soon in the next part. Second part, there will be covering all the rest of the circulars related to June 2025. Okay guys, thank you so much. Bye bye, take care.